And I think my father had a relationship with one of them, and he sold them like this $150,000 or $100,000 insurance product
Oh no.
that went to zero,
Oh
zero,
no.
and then they just left the country, right?
Oh no.
And I don't think he got a dollar back, but
Yeah.
uh,
Did he ever invest again?
I don't think so.
The whole point of this podcast actually was to have a session where we can focus on two things. We can focus on active wealth, which is how to generate wealth, right? When we talk about wealth management, we talk about investing. A lot of times we talk about how do we act with our money. But the reality is the majority of people create wealth through their jobs, through their businesses, and through everything like that. So when we talk about wealth or we talk about investing, the way I like to always look at it is there's two elements to it. There's the active side, which is through our own efforts, through our own toil, through whatever we do, where we add value. And then the second side is passive. And passive is, okay, how do I, now that I've grown my wealth or created wealth, how do I manage it or let it support me in the future? So I wanted to first start with welcoming our first guest, Jugal, to the podcast.
Great, thanks so much for having me.
Yeah, and what we wanted to look at is, first of all, just the active side. But before getting into the active side, probably tell us, who is Jugal?
Well, so first I want to say that I'm so glad that Bilal, you are now doing a podcast. I feel you got the exact radio voice for it, so I'm
Oh,
very
yeah.
happy to hear that deep voice in that mic.
Thank you.
But my journey. So I started. So we both went to university in Canada. I went to
Yeah.
the University of Toronto, and I started my career in digital media. And I think a couple of years in, most of my clients were large enterprise businesses. And just like any very young liberal person, I thought, hey, you know what? I want to go help the world. I'm going to change the world, right? And
Typical Canadian.
typical Canadian young
Yeah.
guy.
Yeah. A
And
lot of
I
similarities.
was like, yeah, I was like, okay, what am I doing now? I'm just making money for people that have a lot of money. And because I studied economics in school, I really got to kind of understand like what are some of the things that really improve a society economically. And it was either like female empowerment or youth empowerment. And I thought, okay, those are the two things that I think I could support over time. And at the same time, I really sort of started getting into technology companies. At the time when Shopify went, public in Canada. I got to work with some really cool tech companies while I was at the agency. And I said, okay, this is maybe my jump to do that and support that mission. And joined a company called InternsMe, which was now Olive at that time, and their whole the whole mission was how do we increase employment of young people and fresh grads, right? And I was like, this is the perfect thing for me. I'm going to do it.
Interns. If
yeah.
anyone's listened to that radio, on the radio on the VI, there was this one ad, and it was interns. And still to this day, I remember when we first met, and you told me the company had a different name before Olive, right?
InternsMe, yeah.
And the company's name was InternsMe.
Yeah.
Okay, so I remember the first time I met you, it was that you told me the company. I just imagined the voice interns in my face, and we talked about that. Yeah. Sorry, please go ahead. So it just comes to mind every time. Yeah.
One of my one of the many things we worked on over there. So and I think that was very rewarding because I got to learn about technology. It was definitely a small team when we joined. We got to sort of Series A, and I don't think it really worked out. It wasn't really a venture scale type of company. And then I joined a company called Urban. That was a rental marketplace where we would try to digitalize the entire rental journey. So all the way from finding a place to signing the contract and moving in. And that was a sort of like a corporate venture backed by the same guys at Gafu. And that's how I met Hussam. And then we talked a bit about Tabby and very early stages. So I think this was before kind of around Series A. And we both thought maybe Tabby's not ready for marketing at that point because I think they're quite early, still sort of showing that product market fit over time. And things just changed so quickly at Tabby, and we decided, okay, this is maybe the right time. and that's when I joined that team. I think we joined when I think we were around 20, 30 people, and now much larger, about around, I guess, 1,000 people across the
Cool.
team.
What a
Yeah,
success, right?
yeah,
And what a short amount of time as well. Which
yeah.
year was this?
That was 2020.
2020.
Yeah. Oh, 2021. That's 3 years ago. Yeah.
So very
Yeah.
few people experience going from such a small team
Yeah.
to 1,000.
Yeah.
So tell us about that.
We're still figuring it out.
Okay.
Yeah. I definitely
Yeah,
wouldn't say we've got all our ducks in a row.
yeah. It's crazy.
I think we just liked, we definitely, I think, if you ask me what is Tabby the most afraid of, Tabby's most afraid of becoming a big company, which
Well,
is
you
kind of
guys,
strange because we want to be a big company, right?
I'm
But
imagining you already are a big
yeah, we are a
company,
big
right?
company, but I think the way we operate is something we're super afraid to do, right? I think we give a ton of ownership to people within their teams. I think we're just so afraid to move slow and so afraid to have like, large corporate policies, tons of red tape, and as much as we're afraid of that, we do see the value of it at some level, but we
Comes with
definitely
the
want
territory.
to. We're I would just say we're afraid of it and we don't like it. So I think the way we kind of try to operate, um, sometimes it can feel we're still quite small, right? I mean, I think that's quite intentional in the way we do it.
Mm, okay, interesting. And what has been your learning experiences from moving from a team in an organization with 30 to 1,000?
My early experiences,
No, just
yeah,
the general experience. What has
yeah,
been your learning? Like, if you were to take some learnings out
yeah,
of that and to give suggestions to others that might go through that,
yeah, for sure.
how does culture change, for example?
Yeah, so,
Because culture must change on a quarterly basis when you're
yeah,
growing that rapidly.
yeah. Leadership matters so much initially, and as long as you're a close knit of group of people, I think that culture will last long. I think we, um, so I think, yeah. So I think if leadership is very kind of aligned on that culture, I think that will resonate across the team quite well, right? Um, I think in terms of mistakes in hiring, I think, which I've made quite a few, and I think a lot of people in our team have, and I think there we definitely have some learnings. Like definitely number one is wait it out, right? If you're not going to find the right person, just maybe because you're desperate, you have way too much work to do, I need to get someone on board. It never, ever, ever worked out, right? Where we had to make maybe a subprime hire from someone we were not super excited about, but we just needed to fill the gap or fill a role because we were growing too fast. And I think that never really worked out. And even now, sometimes if it takes us a year to hire, that's okay, right? And I think just as a culture, we're all okay with that and more comfortable about that because we've seen that and how that plays out over time. I think the other thing we got um, a lot better in is just over communicating. And I think what I really encourage people just generally as a even in our team is because we're sort of half remote, right? I think we have a lot of people that are remote, a couple people in the office, is just try to over communicate wherever you can, like just show presence, because I think it's so important, right? I think you can really get into your silos within a company and not be aware of what's happening at a wider level, or people not knowing what you're kind of working on, how you're contributing to the bigger goal. So I think over communicating and definitely not settling on any hires has probably been very critical in terms of our growth.
So in Tabby, how important do you believe marketing was in terms of the success of Tabby as a story?
I do think it was quite important, but not maybe in a traditional way, right? So if you think about, so the way you think about it is, Tabby's a marketplace. You've got sellers on one side, you've got shoppers on the other side, right? And and then the way we looked at it as sort of like growth strategy for the company is that there are a couple of ways to grow. So there's and as much as maybe marketers don't like your 2x2 quadrant classic BCG quadrants, we definitely use one which is kind of like reach and efficiency. So low reach on the bottom, high reach at the top, uh, low efficiency on the left, and high efficiency on the right. And the top right is basically where do we get the most reach and high efficiency? Because part of any good strategy is focusing on some core channels, right? So we could have gone out to a bunch of customers directly and said, use Tabby, do a bunch of paid ads, do billboards, whatever. But what is the experience like? I found out about Tabby, I get the app. I have to go browse for some of the stores that's available. I have to check out, and then I have to pick Tabby at the end, which is a huge, long process with a bunch of friction. So I guess low efficiency, right? More friction. But where we really kind of focused on was working with our merchants. And why I think Tabby's so special is because Tabby can add value to a merchant without needing a big network. It's much more powerful now that it has a large network, but it was also beneficial for a merchant to add Tabby at checkout even without customers, right? Because I know I can still increase conversion. I know I can still increase my average basket size. And that's what made it so powerful. But what we really did to grow that was how do we work with merchants to expand our shopper base, right? So how do we help them by also growing our shopper base over time? And that was easily the most single beneficial thing for our early stage growth. We didn't invest anything in terms of brand. We didn't invest anything in terms of direct to consumer marketing, but we really relied on our merchants and anchored on them to help us grow in the early days. Now it's very different, right? Now we have a very close direct relationship with our customers, and that's when the product experience also really mattered.
So at that time when that decision was taken to focus on that type of marketing or that type of expansion, getting customers, you had a lot of competitors, I'm assuming.
Yeah,
because there was a lot of people coming into the BNPL space. Did the competitors follow a similar approach?
I think they definitely tried.
Did they all try at the same time?
I think that I think what's more difficult to do is, can you tell the right story to some of the large retailers to give you a try, right? And can you be aggressive enough to do it? We had tons of advantages to do this, right? Like, why were we well positioned to do that? One, our CEO Hussam, very well integrated into the retail community, really understood the pain points of our customers, so our retailers really well. Can we package our benefits to them in the right way? So I got a ton of good insights from him to be able to do that for a lot of our businesses and with our business development team to land some of those retailers. And then can you also clearly show a path on that conversion growth over time for them, right? And I think once we landed some of the biggest retailers first, before any other BNPL provider, we were on a really great sort of rocket ship, right? And that gave us a really strong start. And from then on, what's been the most difficult thing is to maintain that leadership position.
Okay. And so it seems like that was a comfortable journey from that, but I'm sure journeys aren't always that comfortable. So what were the challenges you faced in that journey in terms of growing that expansion where it might have looked easy in a competitive environment?
So I mean, there's tons, right? So from our company, I think there was several times from even a capital standpoint. So one of the things about growing really fast is that capital and cash flow becomes really important, right? So there were tons of times where we were like a couple of weeks out before, if we didn't raise a certain round or a certain debt, we either had to shut down a bunch of our volume or get into a really bad place. And we're talking about some pretty close calls over time.
Wow.
And in terms of other competitive pressure, I think there's also, well, first of all, like, I mean, just generally about competition, and I truly believe this, and I'm not just saying this because it sounds like PC, but like, I'm very happy with competition, right? Like, what is Tabby really trying to do? Tabby is trying to create a form of credit that's fair, that's sustainable to people versus like other credit card options, right? So if you have other competitors doing kind of the same thing, like, overall, I'm happy that people are using BNPL over credit cards that might put them into debt traps, generally.
Like
so I feel like as an industry, I would want to support it across the board. But we're all competitive people. We want to be the winners, and I think we do a lot to try to get there. And what we didn't do is we really focused on like long-term strategies. So I think a lot of our competitors spent a ton, burned a ton on quick fixes like, cashback programs, discounts, coupons, um, really, really attractive referral code bonuses. We always stuck to sustainable growth, even during like the ZERP phenomenon era, right? When money was
What is that?
cheap.
Oh, yeah.
Yeah, when money was cheap, we could raise capital. We could do it at very preferable terms. But I think we always kind of understood, I mean, between 2020, 2021, that um, that was, everyone was overvalued. We were overvalued. Right? We knew that like the pendulum has swung too far on the other side, and we knew that pendulum was going to swing back in some way, and businesses would need to make sense again, right? And I think that was like super fundamental for us, and we always played the long term game. And now we're in a very good financial position to support sort of that growth, and versus where some of the others didn't have the same, I guess, sense of mind at that time, and are now in a very, very tough position.
So you talked about competition being sometimes friendly, but I feel like it depends on the industry. There's some industries where you can have multiple different competitors surviving. But in your industry, in BNPL, realistically, over a long period of time, and worlds change, but if we look at today's world, how many companies could really exist in that space, all sustainable?
Not a lot. Yeah. I mean, I think, just recently we looked at what's consolidation over in the buy holding for Nikhil and a couple other brands, because it doesn't make sense, right? I mean, even if you're looking at the UAE, probably the most banked per capita market, one of the most banked per capita markets in the world, right? So I think at that time, though, you knew there was going to be one or two players that would come out as winners. But at that time, I think we're looking at like 7 to 8 or maybe more BNPLs trying for the same thing, right? But I think eventually the market is at a certain size. It can only support a certain number of BNPLs that would really make it work. And if you're looking at just the region itself, right, I'd say it's still very exciting, but it's not the United States, right? It can't support that many. And for our business to really work, it has to be at mass scale, right? I mean, if you just think about like, look at the largest retail groups that you have, right? They could have all sort of try to create their own sort of lending service or BNPL model. A lot of them kind of flirted with the idea, experimented with it, but it would never really work because the business model doesn't work unless you have massive, massive scale.
Mm-hmm.
And that's the benefit.
Yeah.
And if you are going to be a certain retail group and you're doing it only for a limited number of brands, it's never going to be big enough. And then let's say you go try to sell it to another retail group, they're never going to trust you with that data because you're incentivized to be against them, right? So having someone as a third-party player to provide lending to all these players is super, super important, right? Same reason why Amazon in the States works with the firm, Walmart works with the firm. They could have, they're big enough to support their own, but they see the benefits of being with a agnostic partner.
I like that. I think to pivot a bit from that discussion, and it's, if not Tabby, if not BNPL, where do you feel like marketing and or yourself can be most impactful? In which industries do you think it's the most important or it's the most interesting to capture when it comes to marketing?
Look, I don't want to make it sound like marketing is not important. Right? It's definitely important across many different industries, but I think there's certain industries where it's so heavily indexed, right? And that's like beauty, fashion, high margin products or high margin products, because that's the whole value is the brand.
It's all brand.
It's all brand, right? I think if you're looking at more of the lower margin industries, maybe not so much. Maybe it's more operationalized. And if you're looking at, even if you're looking at something like a Google, marketing came very late to Google. Like brand building came very late to Google, right? I mean, it was just the most excellent product ever created, the world's best money printing machine ever created, and that grew that brand, right? And I think, yeah, I think we talked about it before, but I'm a big fan of how brands grow with Byron Sharp, and one of the big tenets of what's important for a brand's growth is how many new customers can you get to use it, right?
I remember with Gmail. I remember when I was young, there was that exclusivity about Gmail. You couldn't get Gmail unless you were invited, and you
Yeah,
would get
yeah,
free data.
invites,
Yeah,
yeah,
and you would have. I had Hotmail, and it was I didn't have any more balance in terms of like kilobytes or whatever
yeah,
it was at the time.
yeah,
And then you get an invite, and
yeah,
that invite was so
yeah,
valuable.
yeah,
It felt so great to be part of it.
yeah, yeah,
The fact that I still remember it till this day
yeah,
shows you how effective a
yeah,
campaign is. But we say that only marketing, but like that's probably the best. That's
yeah.
probably the best marketing campaign that I can still remember, right?
Yeah, no, for sure. But yeah, you're so right. And I think that was all kind of getting muddied up, right? So you could say it's a marketing campaign. They could say it's a growth campaign. It's a product
Yeah.
growth thing. Like, I
Yeah.
mean, like what is marketing anymore? It's kind of like what is growth anymore, right? It's across all teams, across
Yeah.
product teams, across growth teams, across marketing teams.
Yeah.
But as a company culture, if you're growth oriented, then it doesn't really matter what team you're on. You're all going to be working towards the same goal.
Yeah, that's true. Of course, you want to, in marketing, it's really wearing the business hat, right?
Yeah.
Marketing essentially is how do we grow our customers? How do we grow our revenue? How do we increase the value we provide to others?
Yeah.
Essentially, it is the business, right?
Yeah.
So you're going to get involved with product. You're going to get involved with everything
Yes,
else.
exactly.
And that's how broad it is as a concept.
It's so central to the core of the business. Yeah, for sure.
Yeah. Yeah, I like that. Let me take a step back, and this is we do want to focus on the financial element of this podcast. So what I would say is, how much has financial objectives in terms of how much have you been driven in your career based on the fact of you've been in startups, right?
Yeah.
So
Yeah.
it's all over startups. Was that mainly due to passion for startups? Is there an element of there is a monetary reward in that? Because
Yeah.
it seems like with startups, usually the monetary reward is very much related to success
Yeah.
and not necessarily when you're joining a large organization and it's much more about KPIs and bonus pools,
Yeah,
etc.
yeah, yeah.
So walk us through the financial element of that.
No, it's a great question. Like, if I really think about it, like, should you ever join a startup if hitting your financial goals is really important to you, or if you've got very high financial goals? And it seems like the dumbest, worst idea ever, right? Like, especially
On the surface.
on the region.
On
And
the surface,
yeah.
it does, yeah.
Yeah, I mean, if you look at the region, like, how many success stories do we have? A couple, right? So
You're
from
one of a few?
Yeah, from a chances perspective, like from a probabilistic, rational perspective, startup seems like a pretty bad idea,
Yeah.
right?
Yeah.
Like,
From I'm working to
Yeah.
create wealth and
Yeah.
and be rich.
and
It doesn't
startups is
seem
going to
like
be my path. Yeah,
on paper it doesn't look like the smartest
yeah,
idea.
yeah. On paper, I would say that's a
Yeah.
bad idea.
Yeah, it
right?
makes sense.
And I probably wouldn't recommend it to most people if I had to come in from like a probabilistic, rational standpoint.
If you were an advisor.
Yeah,
Yeah.
right. But if I was a career advisor,
Yeah.
for example, I would say like that's from a probabilistic angle, that would be foolish for me to recommend to you.
Okay.
So I think, I'm not an entrepreneur, right? And I've been part of early growth stage companies. I think I have some entrepreneurship qualities, but I haven't taken the full risk, right? So I wouldn't know how extreme that is to do. But if like yourself and other people, you can't convince them not to be entrepreneurs, right? Because like that's what they're gonna do. Like there's 100 billion reasons not to start your own thing. It's one of the hardest things in the world, but you can't stop an entrepreneur. In fact, you should never encourage someone to be an entrepreneur because that means they won't have sort of the grit to get over it, right?
Yeah,
And to the hardships. So what really led me to it? I don't know. I just love technology. I just love that industry. I think when I was very young, so like I think I picked up Photoshop when I was 11. And the reason for that was to design my desktop. I wanted my desktop to look a certain way, and everyone was like, "Okay, I can't find these themes to make it look that way, so I'm just gonna build it." And that's how it really started. And then I got into like designing icons, and I got into designing wallpapers, and then I got into designing into like, and then eventually I got good enough to commercialize it. So by the time I was in my I was like 13 or 14, um, we started making like websites for people, right? These like small restaurants or like small businesses that are looking to get some cheap labor from a 14-year-old kid, right?
Yeah.
And and then they would be like, okay, great. So I'm really happy with the websites. It's going well. Can you help me promote it? I'm like, yeah, sure. Why not? I'll figure that out. And
Oh
then we'll kind of
wow.
figure out like, okay, how do some of these platforms work? And that was sort of my journey on learning like marketing and design and building these things. And so, so, um, so I think it was like very innate. I just kind of like really liked that whole experience of building something like 0 to 1 or building something from nothing. And I really, really enjoyed that. I don't think design was even kind of like a career path at our time, right? Like when we were growing up, that wasn't really an industry. That wasn't really what it is today. And I just really kind of fell in love with that whole ecosystem. I think I really enjoy anywhere between sort of product and marketing, and that's why I really like sort of technology um, led businesses
Nice.
over time. And I think that just kind of brought me to it. But at the same time, when I think about it, I was always in a position to be okay with it, right? Like I was young, I could take more risks. If I had really, some real responsibilities like children or something when I was that I do now, but I didn't
Father
before,
of two.
yeah, would I take those risks and maybe not, right? And then even with Tabby, um, my wife Natasha, super successful in her career. So when we're looking as like as a family, we know we have one very solid, um, uh, dependent earner for a family, and like maybe I could take some more risks for a moonshot landing,
Yeah,
right?
it helps being a dual income family, right?
Yeah,
Dual income family allows for one to take more risk
yeah,
at the end of the day because you have more stability within the other
exactly,
income.
right.
Sure. But I think you have to be, not only do you have to enjoy product and technology, but you have to be somewhat entrepreneurial to want to join
Yeah,
early stage companies
exactly.
because you have so much impact in an early stage company.
Yes, and risk.
For sure. You
Exactly.
have to
Yeah,
love the risk
yeah,
because you don't know what's going to go
yeah,
on. And I remember in my days working with HSBC, as much impact as I could ever have, you can't move the needle.
yeah,
There's some organizations that are so big
yeah,
that, yeah, you can move the needle in your world within the organization,
yeah,
but it's not very impactful for the overall organization. But when you're in an early stage company, it's very high impact, but it's very high risk because if you that impact could go well, but that impact can go very poorly as
yeah,
well.
yeah.
So that means you definitely have an entrepreneurial drive there. So have you ever thought about opening your own business?
All the time.
Okay, nice.
Yeah, I think everyone always, anyone I think who joins early enough companies has some sort of internal entrepreneurship spirit. Right.
Okay.
Yeah.
And which industries do you like the most then? Or like do you think it's more about then the idea and not the space, or is it the space that drives the idea? Like, so when it comes to thinking about entrepreneurship, is it finding a problem to solve, or is it I really like this sector, which could be finance, for example, and payments,
Yeah.
and I find this interesting and I'm looking for a problem there. So how does one go about, thinking entrepreneurially
I mean, I think it
in that
depends
way?
when you're like, I think it depends on what you really want out of it, right? So if you are if you are building like a venture scale business, right? You have to find a big enough problem uh, to solve. Um, but if you are incredibly passionate about something and you are bringing a unique point of view to something, you can probably find some level of success in sort of any industry, right? Um, so I think it kind of really depends on what you want and where do you see. I think for me now, I mean, because a lot of us joined Tabby in very early stages, like that's kind of like we're so attached to it and we feel so close to it and we want it, and we're so early. Like, I mean, what I tell my team all the time is just so what we're about 10% of e-commerce today. Um, e-commerce is about 10% of total retail, right? So we're literally 1% of retail. We're just starting. So as successful or big as Tabby might think we are, like we are so small, right? We're just literally starting. This is our first wave as far as we're concerned, right? And I think the opportunity ahead of us is just super, super exciting, right? And I just think like now the problem is just so much bigger that we can solve towards, and I think that's what I'm really, really excited for. So currently, I mean, I think yes, there's always some ideas that are like discussing, we're floating around. I think we all do that within our
Yeah,
company,
of course.
And but I think we're all very much excited and committed to see Tabby grow.
Especially when you've been with it from such an early stage.
Yeah.
Yeah, there's an endowment bias to it,
Yeah.
right?
Yeah.
Maybe we shift to the financial aspirations on the financial side. So generally, how do you define your own financial aspirations?
So, I mean, I think we all look towards sort of some level of financial freedom, right? Where
Number one goal mostly.
Yeah,
like in terms of average, you hear about goals, financial freedom.
Yeah, it makes total
That's
sense,
on
right?
top,
Like
yeah.
if I can do whatever I want and I never have to sort of think about money, and I think that's going to be such, I mean, so freeing, right? Just remove out any kind of golden handcuffs or any shackles that you might have.
Yeah.
So I think that's definitely sort of the overall goal. I don't think I was super clear on what that number would have been until like maybe a couple of years ago, right? But I just thought like that's eventually where I would want to get to.
What was the driving factor to start thinking about that as a concept? Did you think about that and that came to mind in terms, were you ever conscious about what your financial objectives or aspirations were at all? Or what happened for that to trigger that thought?
I don't think I thought about it much until maybe a couple of years ago. And why? I'm trying to think like what would have maybe trigger for me to think about that. And I think it was when I started at least investing and saving for the first time. And then it was the question of like, so what? Right? Like where am I happy now? Kind of like just thinking about like the so what question, right? So like, okay, great. Now I got a couple of dollars in the bank, and what should I be? Where does this go, and where do I stop, or do I just have to keep saving? Like how much do I need to save? And I think some of those questions kind of really made it clear and started thinking about, okay, what is sort of like a big lofty goal that I could hit and be very, very happy with my life.
Interesting. Yeah, I've noticed this a lot, which I don't think is as intuitive for people. But what I've seen so much is people start thinking about their financial objectives the more and more they see the funds in their bank.
Yeah.
As in, because they now I can be much more mindful of, okay, I've worked very hard and I have some savings there. And I start dabbling with investing or dabbling to what to do with it. And then I start defining objectives. And I've noticed with people, as you grow more in wealth, as you have more anxiety about wealth.
Yeah.
And some people think that the wealthier you are, the less anxiety you have. But there's a lot of times where the wealthier you are, the more you have something to lose.
Yeah.
And I think also people get really defined from their first experiences in investing. So how was your first experience in investing? And can you tell us more about that? If you remember, what was your first experience in investing?
It was the most boring thing ever.
Okay, what did you do?
I did a ton of research.
Okay.
Before
Jugal-esque.
starting my investment journey. So
was that books or was that articles? Sorry. Can you tell us more about the research process?
I think it was more articles. Yeah, I don't think I read any specific books. I think it was just like articles and YouTubers.
Oh no. Right? Okay.
But I think, but you kind of bring it down to like something that makes sense, right? Okay. And then you just try to obviously check like any kind of reference study or something like that. And I think what really kind of stood out to me was the one number that really stood out to me was that like 80 to 90% of hedge funds don't beat the S&P 500.
Yep. I love that stuff.
And that like blew my mind, right? Yep. And when I first learned about that, so who the hedge funds hire? They hire the most sophisticated physicists, the most sophisticated mathematicians, the most
Quants.
sophisticated, quants, right? And
Their name
these
is
are
like
geniuses,
quants.
right? These are
Yeah.
geniuses.
Yeah.
And they spent their every waking hour trying to crack the market,
Yeah.
right? And they fail 80 to 90% of the time,
Yeah.
which is crazy, right? So, and I thought, okay, so that I'm not going to beat them,
Yeah.
right? And if they're failing, I'm definitely not going to beat them. That's not going to be me because I have my own career and my own path. And like you said before, like I think where are my chances to really earn some wealth, right? Is it where I spend most of my time in my life in my work, or is it going to be the couple hours a day when I'm doing or a couple hours a week when I'm doing like day trading or figuring out the best stock, right? And it was always pretty clear to me, again in a probabilistic scenario, that the most wealth I could probably create is focusing on being the best at my job, right? And it doesn't matter if you're like an architect or a doctor or a designer or whatever you are. The best thing you could probably do for growing your wealth is just being the best at what you do, right?
Yeah.
Because even the people that spend 100% of their time figuring out how to beat the market, only the best figure it out.
I think a few things is we'll add the notes to those reports that to the description about the metrics you were talking about. There's also SPIVA reports, which is like active managers versus passive, and we can talk a bit more about that. But to follow up on that as well, or to add on that first, I would say even business owners. You'd see a lot of business owners, and what they say is, they say, I can't make in markets as much as I make in my own business. So sometimes when they think about investing and they think about 5 to 10% in investing markets, just doing the normal passive investing, they go like, yeah, but I make more than 20% in my business.
Yeah.
But it's like, yeah, because you're heavily involved, right?
Yeah.
You are the added value. Your business and what your opportunity is what gives you the added value. The whole part of a portfolio is to supplement that, to save to put the chips off the table.
Yeah.
Essentially.
Yeah.
But also to comment on that, it's, you went for articles and you went for videos, but sometimes I worry about that. And what I worry about that is, it seems like you got some very good articles, or you went through a few to find good ones. But sometimes there's a lot of content out there today that sometimes doesn't have the best interest. There's a lot of articles and videos out there that promote trading heavily, right?
Yeah.
They're heavily sponsored. There's so many people trying to, the whole concept of eToro was, if I'm not mistaken, it was eToro, is you could follow a trader and mimic their trades.
Yeah.
And eToro is huge.
Yeah.
And there's a lot of YouTubers out there that all they do is they promote this stock or another stock, and then they sell a course.
Yeah.
So maybe help us understand, how do you distinguish between content that has your best interests at heart and content maybe that it's not that they don't have the best interests at heart, but maybe it's just not as qualified in terms of opinions?
No, it's a good question. I think it's more important now than ever, right? I think, financial advice or not, or just advice in general, is it's about media literacy, right? Like, how good are you understanding media overall, and do you understand the incentives that people might have, and can you figure out a way to get to truth, right? And that's like your overall mission as anybody learning anything.
Yeah,
that should be our goal
for sure.
And I think, like, even I think I was definitely trained at some level at my university, and I really like that. So I went to the University of Toronto, and I never studied economics in school, and I took my first course in economics, and I loved it, and I changed my major, and like that's why I wanted to study. And I think the best thing out of that whole academic experience, and I think there was lots of pros and cons, but I guess the best pro was that it really showed that the world isn't black and white, and it's quite gray, right? And how do you try to get closer to the truth in whatever you can possibly do? And I think today a lot of people, I think a lot of people just forgot why universities exist, right? I think today you have a lot of bashing for universities. Have you noticed that, right? It's like, oh, they don't prepare you for a job. They don't,
all education, though.
Yeah, but that's not what it was for, right? The university was not for that. It was to set up skills, not to work, not to get a job. It was to help you train your mind to understand what a bit about the world and understanding
Never
what's
thought of that.
true or false, right?
Mm.
Like if you look at classical universities, it was like a couple of courses that everyone would take, or a couple of domains that you would study. It was like mathematics, philosophy. It wasn't business,
Yeah.
right? You didn't go
It's
to
about
university.
learning.
It's about learning. It's how do you learn?
Yeah.
Like what is
It's
that
true.
process of learning?
True.
So I think classical education is still really good and it's still very useful because, especially for times like this, where now the rampant of um, information or misinformation out there. Like if you are trained to understand how do you get towards the truth of something, that's so important. Right.
Yeah. Yeah, I really like that. I think seeking truth is so important. One of the most things I love about large language models today, especially with GPT-4, I remember when ChatGPT first came out, I was so excited to test its knowledge about my domain,
Yeah.
right? And I'm so passionate about economics and
Yeah.
finance and markets and investing. So with ChatGPT, it was 3.5. I tried it and it gave relatively good answers. So I'm like, oh, okay, it's not that great.
Yeah.
But it gave better answers than a lot.
Yeah.
But then when GPT-4 came out, I remember saying, "Oh, this is fantastic. It's a
Yeah.
great financial advisor."
Yeah.
It scored well, of course, in all the examinations, the standardized examinations when it comes to finance and it comes to investing. But what I really like about it as a method of education and learning is when you have so many different sources and you want to seek out truth, it's a good resource. And it's not necessarily, oh, I need to rely on this 100%. But sometimes if you have a couple of opinions and you feed it into it, they'll probably give you a pretty solid opinion to look at. So I think, yeah, that seeking of truth is so important, especially when it comes to how to invest, because I think there's a lot of different players out there. I think we compare crypto to equities. We talk about trading, and I think there's a whole side of the internet. Not saying that what's right and wrong, but I don't think that the internet sometimes is a great place to get the truth if you don't research well enough.
Yeah, for sure.
Sure. So tell us more about, so your first experience was pretty smooth, or not pretty smooth, it was pretty boring. You
Yeah.
were saying that's how
Yeah.
you suggested.
Yeah.
So tell us, what did you do that was boring?
I went into what you would say is the most boring form of investing, which is just classic index ETFs, and Vanguard was my hero. And then I think also I listened to a couple of Berkshire annual,
Mm-hmm.
the Q&As that they used to have, and people
Yeah.
always ask
Warren
him
Buffett's
about,
company. Yeah.
yeah, people always ask about investing strategies for retail investors, and I think that also resonated with me a lot, right? And I think his core advice for more retail investors was just like, just put in a low cost index fund. Don't worry about the hedge funds. They're not better than the market, and this is probably your best bet, right?
I remember all through university, you would see so many articles about how Warren Buffett invests.
Yeah.
And there's so much, the active world always promotes Warren Buffett's way of investing. Well, it's amazing to see what Warren Buffett actually
Recommends to
says.
people.
He's recommending always
Yeah.
most boring stuff. But you see it's boring until the market goes down. And if you've been investing for a while, then you've experienced downturns.
Yeah.
So was it still boring when you experienced it? So do you remember the first time the market went down? And have you ever seen red in your portfolio? Let me ask it like that.
Yeah. I think definitely after the interest rate rise, post-ZERP era, it was pretty scary for a long time.
Okay.
Yeah.
Yeah. And how did you react to that?
You know what? I was okay. My wife's not so much. Yeah.
That's actually a good thing. Like how people, especially when you're in couples, because you have varying objectives, it's interesting to look at sometimes.
I mean, I was always long-term, right? Like I was always long-term. I think I always thought, look, I put the money in, I'm not gonna, like, it doesn't matter for 15 years, right? That's the point.
That's how you think. That's how it starts. Yeah.
Yeah, like that's the point.
Yeah, until you start logging in every 2 days and seeing your balance. Yeah.
Yeah. And on all the noise out there, right? Like all the podcasts you listen to, all the news that's out there, all the articles that are out there talking about the market crashing or whatever, and you gotta look, right? Just to kind of see the damage. But that's the whole point. The whole point of the low cost index funds is just hold until long term, and you'll see some benefits. So I think from like a risk perspective, I was quite open to that for a long period of time, right? Because it's a fundamentally a strategy that I would believe in, um, compared to putting money in something like a non value generating asset like crypto or something like that.
Okay, music to my ears. So just to make sure that we're all on the same page, because we talked about passive, but when you talk about passive, you're talking about owning equities.
Yep.
Did you bother at all with bonds?
No.
You didn't bother at all. So you went
No.
full on equity
Full
strategy.
equity.
Did you keep cash with you as
Yes.
that proxy? Okay, so
Yes.
you did keep cash.
Yeah, I kept some cash.
And was the majority of that portfolio in equities or in cash?
The goal was to try to keep it like 70-30, 80-20
Okay.
equity. Yeah.
Okay, so it
Yeah.
was majority
Yeah.
equities. And when the market went down, did you usually there's that natural urge to sell, but then there's that logical urge that sometimes drives you to maybe I should add more. Did you make any shifts in your
Never.
portfolio? You never made shifts in
Never.
your portfolio.
Never.
Okay, very cool.
Yeah.
Very interesting. And
Even the arcade genomics. That was a little amount, but oh my god, that hurt. Yeah.
ARC is an interesting one.
Yeah.
A lot of people got really. Maybe I'll talk a bit more about the framework in the UAE. The approach you follow when you talk to others, do you feel like that's a common approach?
No, unfortunately. I don't know why.
So
I think real estate is a big one.
oh yeah, real estate is
That's
definitely
the big one, right?
Yeah.
I think that's the big when people make money in Dubai, real estate is so important to them.
I think it's the opposite of what you said as well. Is when the market went down, it feels so uncomfortable and you check. But also when the market does so well, and real estate has done incredibly well,
Yes.
it really gives you that confirmation bias as
Yep.
well. Regardless of whether it'll go up or down, it makes you feel more comfortable about it.
Yeah.
And you see a lot of people dabbling with that in real estate. And yeah, that has been the preferred way for a lot of people when it comes to wealth management.
Yeah.
So what are your thoughts in terms of investing in equities and diversifying equities versus investing in real estate?
I mean, so I've been in Dubai for a long time, right? And I've definitely seen ups and downs in real estate and how much that can actually hurt in terms of valuation of a property, right? I think now everything looks really rosy and everything looks quite good, but we've all been there for like 2015, 2016, where it was dark, right? And the problem there is just that you're so much of your capital is isolated in one single property. And the other big thing is like it's also just work, right? Like being a landlord is also kind of part of work. You have to deal with your tenants. You gotta fix things, and like you have to like be around and fix stuff. And I feel like if I want to have a passive income stream, like the idea is like no work, right?
Yeah.
And then it completely defeats the purpose if you're getting a property management company that's charging you like 4 to 5%, and then you just lost your entire gain.
We've done a few research to show that diversified ownership of companies, i.e. equities, has outperformed real estate over long periods of time. But yet that sometimes doesn't really hit home with people. But if you look at other markets, you look at the US, you look at Canada, you look at ultra high net worth individuals, endowment funds, foundations, professional investors, you talk about Warren Buffett, you talk about Bill and Melinda Gates Foundation, you talk about most organizations, professional investors, they don't have an allocation that's that high to real estate. It's usually 5 to 10%. Sometimes it can go up to 20, 30%.
Yeah.
But it's usually not the primary source of wealth management. But yeah, you're right. Here in the region, it's a very common way. So what do you think is one of the sources of that phenomena when it comes to the region, or particularly the UAE?
I'm not totally sure. I mean, I think for the longest time, I think access to global markets was also quite limited, right? I think you just had sort of like Interactive Brokers and Saxo Bank and a couple of these guys, and it wasn't that easy as a smooth process of setting it up. I mean, if you look at Saxo, it's quite like, or Interactive Brokers, it's quite like it's made for a trader, right? It's not made for an investor. So I don't think you had, or like someone looking for long-term investments as a retail individual. So I think I just don't think. I think access was definitely a problem, and I think even from an education standpoint, um, the value of diversification wasn't super clear. Equities. I mean, I remember if a banker asked you what is your risk appetite, right? And if you said medium to low or something like that, they say, "Oh, equities is terrible because it's like the most riskiest asset in the world," right?
The language is so wrong.
And it's so wrong. It's
They
like, but no,
call
that's actually
equity
the
portfolios aggressive.
yeah,
Yeah,
yeah.
it's wild.
And of course, people feel that way because that's how it's always been positioned.
Yeah, language matters, right?
Yeah,
Language really
yeah,
matters. It shapes the way we view the
yeah,
world. And I've always been so surprised when I've seen they say you do a risk tolerance questionnaire. And after you do the risk tolerance questionnaire, you come out on the higher level and it's very high risk.
yeah,
It's like go into a full equity portfolio.
yeah,
And I find that crazy because I feel like sometimes the word risk is so loaded.
yeah,
And what I always try to look at is there's two types of risk. There's, and I, being originally Lebanese, I like to shape it in the Lebanon way. There's the Lebanon risk where there's no volatility, and that's zero volatility risk. So there's zero risk, but then one day you wake up and your money's gone. And that's Lebanese banking story, where it was always perceived to be no risk, but there was no volatility risk, but there was a lot of credit risk because there was a lot of concentration. And then the second type of risk is that volatility risk, which is, okay, my value of my portfolio, should I want to sell it today, goes up and down. And that's called very high risk.
yeah,
But at the end of the day, what do you own? And that's so impactful when it comes to
yeah.
language. I think that's something our industry has been doing very wrong in terms of how do we position what are equities, what is a full diversified portfolio. So to go back to that, you think mostly it is an education thing. It is a positioning thing.
Yeah, and I think a lot of financial products are also created as sort of positioned as like get rich quick schemes,
Mm.
right? Versus what they really should be, right? Like, I mean, I think even I don't remember how long ago this was, but I think a couple of years, I think like 10 years ago or something, there was Barclays in UAE, right? I think they had
Yeah,
a
yeah.
yeah. And I think my father had a relationship with one of them, and he sold them like this $150,000 or $100,000 insurance product
Oh no.
that went to zero,
Oh
zero,
no.
and then they just left the country, right?
Oh no.
And I don't think he got a dollar back, but
Yeah. Did he ever invest again?
I don't think so.
Okay. Yeah, that leaves a scar, doesn't it?
Yeah, I don't think he ever did that again. I think he stuck with sort of real estate
Yeah,
and
there
those
you
type of
go.
things. Yeah, and he
There
was
you
like,
go.
never touching a financial instrument again.
Yeah, you see
Right.
that a lot.
Yeah.
We did a
Yeah.
survey. We did a survey with YouGov, and it was, have you ever been sold or recommended a whole of life insurance policy as an investment?
Yeah.
And 52% of people said yes. It
That's
was.
crazy.
Now, I wasn't shocked.
Yeah.
I wasn't shocked because I'm close to the industry. I've seen a lot. But I want to portray like how crazy that number is. It's
Yeah.
52%.
Yeah.
And yeah, I think unfortunately, there's a lot of bad actors, and
Yeah.
that bad actors changes a lot of things. Maybe before we close, maybe just a piece of advice you can give in terms of whether that be in terms of active wealth or that be about how to invest or how to reach your objectives through investing. What piece of advice would you give?
I mean, I don't want to sound like a broken record, but I do want to repeat something that I said before. And this, of course, this is something that I believe in, just from my perspective, which is, I think the worst thing you can do is try to think that you're in like some unique godly position to beat the market. Like the best thing you can try to do is avoid being a day trader, right? Not even just from a money perspective, just from a mindful perspective, so you can really focus on whatever you're amazing at. And how can you really focus your efforts on trying to be at the top percentile of whatever you're doing? Because I think that's your best chances of really growing that wealth and heading towards your goals. Versus sort of the quick get rich quick schemes, right? I think if those existed, then there'd be a lot more rich people out there.
I love that.
Yeah.
I couldn't agree with that more. I think that's a good note to close on. So thanks, Jugal, for being with us today.
Great. Thanks so much for having me.
Awesome.